Most traders waste time hunting other blocks, but here is how to spot them in seconds. Now, first of all, you need to know what an order block means. An order block is the last candlestick before a very big impulsive candlestick movement. In other words, an impulsive movement occurs whereby a large number of orders is being taken place, which means if a large number of order is being taken place in one particular place, it's going to cause an impulsive movement. It's either an impulsive move to the upside or an impulsive move to the downside. Now, for example, looking directly to my chart, you can see that we have our order block being marked out, because this, mere looking at it, if you can zoom in, you will see that this is the last candlestick before the impulsive begin. You can see it very clear. These candlesticks happen to be a bullish candlestick, so therefore this is a bearish order block. And if we happen to see a bullish candlestick, a bearish candlestick before an impulsive move, then that will be our bullish order block. For example, if we have this particular small candlestick over here, and we have this long bullish candlestick, this is a bearish candlestick, so therefore this bearish candlesticks produce what we call our bullish order block. And if again we have another little candlestick here, and a very long engulfing candlestick over here, now this is a bullish candlestick, so therefore this bullish candlestick produce what we call our bearish order block. As simple as that. So in this particular case, you can see that this is the last candlestick before this bearish movement occurs. So therefore this is our order block. This particular man over here is our order block. That is how to mark your order block correctly. And again, for you to find a valid order block, you need to know how to mark your break of structure, because any break of structure without an order block is invalid structure, or you say invalid structural movement. Now you all know what a break of structure means. Is a sign that shows a continuation of the trend, neither it being uptrend or downtrend. It's just a continuation of the trend. You understand that? So now, marking out your break of structure, we have two types of structure. We have three types of structure. We have the bullish structure, bearish structure, and the consolidation. Now, I'm not going to go deep into what a break of structure is and everything about break of structure. Some of them are already in my last video, but now I'm going to talk about order block being marked out in a break of structure. Now, if you have a break of structure like this, something like this going to the upside, now for this move to happen, for this move to be able to break this particular high, there must be a multiples order being placed in this particular place, pushing price from this particular place to the supply zone over here. So, and once this particular order has been taken in and a very impulsive movement started, now you see something like this. Now price have already break the previous low, which means this over here is our break of structure, and this particular movement is showing that yes, we are still pushing to the upside. And once you see a break of structure like this, have it in mind that an order block comes before a particular break of structure, which means if price wants to break structure, price must have already formed an order block before creating the impulsive move that's going to break the particular structure. Now let me show you guys. Now in this particular scenario, you can see that over here should be our order block. This is where our order block should be. Also here, where our order block should be, and also here. All this can also be seen as a demand zone, and all this can also be seen as a demand zone or liquidity. And for you not to form into this particular area, you need something like your Fibonacci level. I taught that in my previous video. For you to know a valid break of structure, because after a break of structure comes a pullback that confirms that this break of structure is valid for Example, if price breaking structure like this is what we call as our pullback. This is our pullback. You understand that? Now, seeing this particular pullback, you need to pick up your Fibonacci level to know if this particular pullback is strong or not. Measuring that with your Fibonacci level will tell you that yes, this particular pullback is strong or not. Now, I'm going to show you two different. I'm going to show you a valid break of structure and an invalid break of structure. Now, once we have something like this and you see a pullback like this and price continue pushing to the upside, this is a valid break of structure, because if you see, even though price didn't tap in at the other block over here, price must have tapped into the fair value gap residing here. This is a valid break of structure because price reversed down to the 50% of our Fibonacci tool. Now, you pick your Fibonacci tool and measure from down here to this particular place, our premium and our discount area. Now, as you can see price already tapped inside this particular area, showing that this particular order block, showing that this particular break of structure is a valid break of structure. But if you have a scenario like this or a case like this, whereby price eventually gives us a break of structure and starts moving like this. Now, if you measure with your Fibonacci tool, if you measure from here to here, you can see price did not tap into this discount area. You can see it here, so showing that this is an invalid break of structure. So number one thing you should be looking at for in marking out your order blocks is for you to find out a valid break of structure before you marking out your order block. Now, let's dive into the market for a real life example. Now, when looking at this, you can see this is our break of structure, and for this break of structure to be valid, let's measure it with our tool from here down here, our premium and our discount area. Now, price is already in our discount area, showing that this particular break of structure, yes, it is a valid break of structure. So after seeing something like this, let's take this out. What you need to do is to mark out the last bullish candlestick before this movement, which is residing here. Then you mark it out. This is our order block, and therefore this order block is valid only on another condition, which means a fair value gap. We need to see our fair value gap in alignment with our order block. So therefore, if there's an order block without a fair value gap, then that order block is invalid, because the smart money can't create an impulsive move without leaving out a traces, and that traces will be our fair value gap. Now, let's see if we can see any fair value gap over here. You can see our fair value gap from here. We have so many fair value gap to here. We have another fair value gap from here to here. Price is already in our fair value gap already. So therefore, this order block is a valid order block. And what we'll be expecting from price to do after seeing this particular place as our entry model, we'll be looking for a change of character to the downside from our lower time frame. Now, looking at my chart, you can see that this is our 1 hour time frame. So therefore, we'll be going to the 5 minutes time frame, because this order block is being drafted out from the 1 hour time frame. So to confirm this particular order block, we'll be going down to our 5 minutes time frame. Now, what we will be expecting, or what you will be expecting from price is for price to create what we call a change of character to this downside, or price to give us any entry formation motive, and that it being price action motive, something like a bearish engulfing candlestick, a doji or morning star, any particular thing, or if you are trading SMC, something like a change of character, a sweep of liquidity, or any particular entry motive, then or a breaker block or mitigation block. Once you have something like that, then we are in for a particular sell. So if price mistakenly push up to this particular place and form something like this, then we are not wasting our time. We're stacking our sell position from this particular place down, 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 down. So I hope by this end of this video, by the end of this video, you should already know how to mark your order block, and three things makes your order block valid: when there's a valid break of structure, and when there is an fair value gap beside or in alignment with the order block. Yes, that order block is valid. See you guys in the next